All right, today the market was down in a big way. Bitcoin did a bit of a bounce near the end of the day. We're going to talk a bit about some of this overarching economic data. So there are some worrying things on the horizon here. While all the numbers are coming in great in terms of there are tons of jobs, there's low unemployment, and employee pay is going up higher than expected, which is driving inflation, which is scaring the Fed, which is causing them to pause their rate cuts in January. Yes, you heard that right. They're going to pause. Very, very likely. There's a 90 some odd percent chance that they're going to pause the rate cuts and hold rates where they currently are. The reason for that is if there ends up being a big recession coming soon, they need ammunition to fight it with. Their ammunition being higher rates that they can then slash down as well as stimulate on the back end with cash in order to get things running again. If they're already very low on the interest rate, they've got very limited tools to work with in order to combat a recession. So that's why they're holding. That's why they're going to pause. That's why they're holding it up high. Okay, and we can also see that the ICI money market funds increased. Their tracking of it. It increased by $66 billion last week. All right, going into this week. Sorry, from last week. So everyone's cashing up. Everyone's cashing up. They're cashing up fast. Okay. There's another thing that's super, super scary here, and that is the 10-year, 3-month spread. That has ticked up now from the threes up to 0.41. When this thing gets to 5, when it gets to 5, there's going to be some scary stuff going on. Okay. 5 is when it's like that's the precipice. So the higher this thing climbs, and the faster it does it, the more afraid I am getting of this market. This thing is concerning. The 10-year, 3-month does not miss for the most part. It is pretty solid in calling something terrible coming economically. So I'm not enjoying this at all. The 10-year rate really needs to fall. It needs to come down. Otherwise, we are going to just absolutely lose our shirts in the market. Okay, I hate being the doom and gloom guy here, but this is not one to ignore. Okay, there's a lot of stuff you can ignore, but the 10-year, 3-month yield spread is not one of the ones you can ignore. Okay, the other thing we're looking at here is the name exposure, the active manager exposure. So let's see, we got an update. Oh man, what happened? There was an update before. Where's it at? I saw it earlier. There it is, 1.8. Okay, so they came in, instead of being leveraged short, they're just regular short now. It went from 64 the week before to 65 this week. We want to see this. Maybe get one more pop up here to back to that 99 again here sometime in January or February. That would be great. And we see that we could see another pop in the market before we drop. Okay, so let's take a quick look at the SPY. We are trading now beneath the 50-day moving average. We are fully separated from this. We are coming down. We are coming down. Unless someone comes out with some fantastic news, the 10-year drops, the Fed's going to cut rates, everything is fine and dandy and glorious. If that does not occur, we're coming down to this low right here. And that low right here is going to be about right here, about 568. We're going to come to 568. If we lose 568, well, guess where we're going after that? We're going to very quickly find ourselves at 560. And if 560 doesn't hold, we're going to find ourselves at 545 on the SPY. Okay, we are going to follow this line right here. Let me draw it. We're going to follow this line down. This one right here. We're going to follow this down. We're going to bounce off of this, or reject off of this, I should say, over and over again. We made a lower low today. Okay, we made a lower low today. We are making higher or lower highs and lower lows right here. We got a high there, got a lower high there, and a lower high here, a low here, a slightly lower low there, and a lower low here today. All right, we got 3 lower highs and 3 lower lows. Guess what's going to come next? A lower high, followed by what? A lower low, most likely, unless the cycle is broken. So let me get rid of all these drawings. There's too many of them on my screen now. And on the way up, honestly, the way up, the highest we're going to go is this line right here. I'd be surprised if we even hit that line. I wouldn't be surprised if we came up, hit the 50 at 594, and then rejected real hard, came all the way down to 568 right after. Okay, this is getting a little bit old, a little bit dangerous here. So we really need to see this. The first week was terrible, right? If we go to 1 week, the first week of January was bad. Okay, it was what, -2%. So that sucks, right? We're on the weekly. We're just on the 21. We could bounce here, but I don't know, man. I don't know. We did not get a Christmas rally. We did not get a good first week of trading on the year. Things aren't looking good. The month here for January is minus 0.95. Not looking so good here. Even if we just come down here to the 14-month average, or no, this is the 9 month average, it'd be 563. We come down to the 21 month, looking at 520. I don't think we're necessarily going to hit that, but things are not looking great in terms of how the chart is showing up here right now. So what happened today? We got a couple of things that are interesting going on today in our space that we watch. And Bitcoin actually did okay. Okay, it didn't do great. It did okay. It's up 2% today. Okay, that's great that it's up 2% today. I like that. That makes me happy. We're still on this channel. We came to 90,000. We're bouncing off 90,000. This could end up being an inverted head and shoulders. And if that happens and we get back above $100,000, we could run for 108 again. Okay, that opens up 108 again. But there is a lot of issues here. We're below the 50-day moving average. We've been below it for 3 days. We have been completely detached from it for 2 days now. That is not good. That's not good. We got to get back up and above this thing. Otherwise, we will lose it. And if we lose it and we lose $90,000, we are coming very, very quickly down to the mid 80s. If we lose the mid 80s, we're going to come down to the mid 70s because there is nothing holding us up all the way down to about $70,000. Okay. On this chart. And right now the chart looks like garbage. Looks like hot garbage. All right. MACD looks like garbage. The stochastics look like garbage. This is all just garbage. All right. It's terrible. From a technical perspective, this looks like crap. Basically, we need to get back up and above $100,000. Until then, basically, I'm looking for, okay, is this thing going to fall? Is it going to fall further? And what do I do to hedge that fall? And so far, right now, today, which ended up being a mistake later in the day, I did sell some covered calls on my IREN. So I sold some covered calls on IREN. You can see, same with IREN, we're below the 50, we're below the 21, heck, we're below the 9. And the 200-day is all the way down at $9. So, and this is looking like it wants to do a formation and then base down at $9. That's what it looks like it wants to do. So I sold some covered calls on IREN just in case it doesn't go back up above $14. So I sold a $14 call on IREN, which even if I get it, I'm going to get it 100% on the IREN shares that I sold covered calls on. And if I don't get it, and if it comes down a little bit, I will collect that premium and probably sell another one until I see that this trend has ended. It hasn't ended yet. We are still in a bit of a downtrend here. This is simply a retest and rejection. Okay, that's what we're looking at. And until we break this yellow line down here, right here, this one, until we break this yellow line on IREN, we're going to ride this here. I mean, we'll find out in the next couple of days. If this breaks to the downside, we're going to come all the way down to that $9 level. If it holds, then we could come right back up to $13, maybe even $14. And I would let go of some of my shares. Bit Digital also looked like garbage today, even though it ended up positive ever so slightly. We're so far down. We're on the 200. This needs to hold. Otherwise, the bottom falls out on Bit Digital. I know it's all doom and gloom today. Sucks. Today sucked. CleanSpark ended up as a 0 day today. Mara fell. MicroStrategy fell, even though Bitcoin recovered a bit. MicroStrategy, like I said before, MicroStrategy is going to vacillate here in between this 380 and $300 level. It's going to vacillate in between that for a while, potentially maybe making a high again in the 440s, 450 range, but it's not going to go much higher than that unless Bitcoin breaks like $200,000, okay? Bitcoin needs to do exceptionally well. It needs to get past everyone's base case. Otherwise, we will not get back above this area of resistance here on MicroStrategy, topping out about 445. Okay, we will not get above that again unless Bitcoin does better than the base case everyone has for it, which is about $150,000. Bitcoin needs to do better than that. Otherwise, MicroStrategy will not make a new high above 445, and it sure won't make a high above 542 if we do not get outstanding performance from Bitcoin. So keep that in mind. Keep your expectations measured on MicroStrategy. Will it do well? Very likely. Will it do as well as 540 some odd dollars again? Probably not, unless we see exceptional performance out of Bitcoin. So measure your expectations, be aware of what these things will likely do, and don't just get it all hopium thinking things are going to go to the moon when they're only going to make it to, halfway to the stratosphere. Okay. So I'm not saying it's going to go down. I'm not saying it's going to dump. I'm not saying that it's like it's done forever, it's never going to recover or anything. I'm just saying if Bitcoin does the expected, we might see 445 again. If it does better than the expected, we'll see 500s again. If it does not do better than the expected, or if it does not meet the expected, we will never see $400 again this cycle. Okay? That's how that is going to shake out. Was there anything that really showed good performance today? It was really just IREN. IREN had a really good December production. We'll have to talk about that. CleanSpark's production came in. So did Bit Digital's. Bit Digital's was doing pretty good too. CleanSpark now has over 10,000 Bitcoin. they have 10,000 Bitcoin now. So they've joined the 10K club for Bitcoin. How many they have? They are over that 30 exahash. So is IREN. So they're doing really well there. They're very, very efficient, both of these. IREN being the most efficient, CleanSpark being like 2 or 3 in terms of efficiency. I am looking for. I'm still holding my warrants. So I don't have any shares of CleanSpark anymore. I'm holding warrants. I've got shares of IREN. I've got shares of Bit Digital. I've got a call on Mara that I'm hoping will eventually work out here. And that's basically all I've got going right now. And so as we watch, oh, Sui's doing great. That's awesome. As we get into January, it's kind of a really awful start to the year. Hopefully we see some more clarity in the market. Right now, a lot of this is coming out of fear of unknown. People don't know what the incoming president is going to do. The cutting cycle for the Fed has been disrupted. We are seeing the 10-year yields get out of control, and all of this is sowing fear in the market. Now, if you're holding shares of things, yeah, you're having a bad time. If you're cashed up, you're probably looking for your opportunity to buy. Do I think that opportunity has come in yet? Not necessarily, because honestly, with this 10-year 3-month spread, this thing is starting to accelerate. And if it goes up any faster, I'm gonna start dumping stock and wait for things to calm down. Even if I have to buy that stock back at a higher price, I do not want to get stuck holding a massive, massive dump. I'm happy to wait for things to calm down and repurchase my positions at slightly higher prices once it is stabilized. But if this thing keeps ripping higher, this spread, I am absolutely going to be selling out on my positions and waiting for things to stabilize. Okay. Anyways, and of course, nothing I say is financial advice or a suggestion to buy, sell, or hold any asset whatsoever. These are simply my opinions based on data that I am viewing. And with that said, please like, comment, subscribe, share this video. Check out the Trade Cave store, link in the description, as well as the channel bio, and have a profitable day.